Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking a little bit about mitigations. Mitigation is an essential piece to your smart money understanding. I've actually made a video on that topic in the past, but I believe there are still certain ideas and things that are very important that you want to be understanding very well if you're actually going to be trying and trade smart money concepts and institutional concepts, right? So I'm not going to be explaining what a mitigation is. I assume you already understand that. If you don't, feel free to walk around my channel. You will find a video on that topic. It's pretty important. So that's what we're going to be discussing today, right? There are certain ideas that I want to present to you guys so that hopefully you will have a easier time, right? When, let's say as an example, price is hitting your point of interest right over here, right? Let's say that's your point of interest for whatever reason that may be. And the things that I'm going to be explaining you here should help you when price is within your point of interest. And if you're struggling, right, price takes you out and then moves. Those things are very likely to happen if you do not understand the concept of mitigation very well. And that's what we're going to be discussing now. Now, before we actually do that, I have a couple of announcements. First of all, guys, Happy New Year's, everyone. Thank you very much for the amazing support I've been receiving in this channel. I am very grateful for that. I appreciate every single one of you, and I'm going to continue to try my best with the YouTube content. So that's first. Secondly, guys, as I posted in the YouTube community yesterday, I've opened a Instagram page, right? This is my only Instagram account. Please understand that very well. Anything that's not IPDATrader FX, it's not me. So please mind that. There's probably going to be plenty of scammers trying to sort of impersonate me and trying to get money out of you. So please mind that. Now that's the first announcement. Second, guys, I opened a Telegram channel. I'm going to be using that to keep you guys up to date in terms of YouTube channel stuff. I'm going to be sending analysis as well from time to time, right? But please understand that I run the mentorship community and that's my priority and my #1 focus. So understand that my time in that sense is going to be rather limited. And yeah, if you want to join the Telegram channel, you will find a link in the description. Any other channel, right, that's pretending to be me, that's not going to be me. The only way you can access my Telegram channel is by clicking the link in the description. Same thing goes for the Instagram account, right? That's the only Instagram account that I have, and that's the one that I'm going to be working on. So with all that being said, guys, we're going to be jumping right back into the video and mitigation explanation. So let's actually get started over here. So guys, we're on the drawing board, as I like to do on this channel. And excuse me for the long introduction to the video. You guys know I don't usually take that long, but I had a couple of announcements, so I wanted to get that out of the way first. Now that we've got that out of the way, let's actually start talking a little bit about mitigations, right? Because once again, there are certain ideas that are pretty much very important if you're trying to trade smart money, right? So we're going to be simply denoting some sort of scenario, right? I'm not going to be taking too long with this video, but let's say you have a POI over there, right? Price starts moving down, and now price is finally at your point of interest, and now you're zooming into lower time frames, because once again, what you should be doing is you should be watching for order flow delivery and order flow development. Okay, that's the very first thing that you want to understand in terms of mitigations. Whenever price is mitigating a block, you want to zoom into lower time frames to try and understand the order flow delivery, right? And sort of the mitigation play that is occurring. Those are key ideas that you want to understand very well, right? So let's move that out of the way for a bit, and let's talk a little bit about why do we mitigate, why do mitigations occur, right? Those are things that you want to understand as well. Why do mitigations happen, right? And this is key over here, okay? You need to understand that whenever price is mitigating a block, what is actually happening over here, right, is that positions are being closed at break even, most probably, right? Because remember, if they wanted to push this market to the upside, they first had to sold, right? Just like they did at this point. This entire move down is them selling the market so they can have a better price, buy price point for whenever they want to sort of do the move up. Now they have sell and buy orders opened, so they are returning back down, right? Now, whether that returns into the 50% of the leg, the 61, 78, 88, the origin, whatever it may be, positions are being closed, okay? You need to understand that as we're trading lower and lower over here, positions are also being closed, okay? So we mitigate blocks because orders need to be closed. So that's a very key idea over there, okay? And that means that depending on the situation, and let's actually get rid of some of the stuff over here because I'm going to be keeping my chart rather easy to read. So as price is trading into the block, orders are being closed, okay? And that's when you see that consolidation, maybe a move down, maybe a little bit of a move away, because you need to understand that, hey, the market makers are actually closing positions over here, and they may require some time to actually do all of that. So that's why you see some mitigations may take up even to 2 hours time, right? Till they're actually done with the mitigations and they can and they're ready to continue and move up, right? So you need to understand that mitigations can take very long. Obviously, that depends on the time frames that you want to be working with, but as a rule of thumb, you shouldn't expect sort of price to hit a point of interest and instantly reverse, even though that happens. But those are specific scenarios, which once again, if you're in the mentorship, you know a little bit more about that. But I'm not going to be sort of giving you everything over here on the YouTube channel. So first understand that mitigations happen because orders need to be closed and that they usually take time to close them out, okay? Those are ideas that you want to be understanding very well. Another thing you should be asking yourself when watching and monitoring a mitigation is the following, right? Have we liquidated yet? That's a very key question. If the answer to that is no, then you want to be staying remaining very patient, and you want to be avoiding jumping into trades early because we have not liquidated yet, which means a liquidity grab in the opposite direction to potentially continue, right? So let's say, as an example, the same POI over here, right? Let's remove the price action within the point of interest, right? And this is an idea that I believe I've spoken about in previous videos, but once again, you still want to be understanding this. If you're seeing, let's say, bunch of equal lows, and then we start shifting just like that, right? And you want to be taking a buy right over here, you want to be avoiding that because once again, we have not liquidated yet. Liquidity has not been taken, and this may actually function as inducement, right? You can label that as such. You can say IN inducement, and you're still being a patient trader and waiting for that liquidation break continuation, right? That's a much better probability and a much better scenario for you to actually look for positions if the liquidation has not occurred yet, because I can guarantee you 70 to 80% of mitigations that you will monitor and watch will have some sort of liquidation action happening within the point of interest. So that's another idea that you want to be sort of paying attention to. The next thing that you want to understand, and once again, I'm going to be removing the price action because we're going to be drawing a different example, and that is the idea of order flow shifting, okay? And I'm not going to be getting very in depth, but just to give you some perspective, you want to be seeing order flow shifting, right? Order flow shifts. Now, what do we mean by order flow shifts? Well, it's pretty simple. You want to see if this is a bullish point of interest over here, you want to be seeing bullish blocks being respected and bearish blocks being broken. Okay, let me write that over here. Bullish blocks respected, bearish blocks, which essentially stands for bearish flow, right? Broken. So that is very easy to read. Actually, it requires a lot of practice, but once you've done enough of that, it will rather be simple for you to understand that. You want to be seeing bullish blocks respected, right? In this example over here with a bullish POI. So let's say that we move away over here, right? A bullish block forms. Then you have this opposing bearish block over here, right? That may actually be responsible for price to hit that and move lower. Well, if you're going to be trying to enter this market, you want to be seeing that break, right? And then you would say to yourself, hey, bullish blocks are being created over here, bearish flow is being broken. Good. That's a good sign. Now, that doesn't mean that you're going to be buying over here right away, right? You still want to be understanding, have we liquidated yet? Right? The order flow delivery. You want to be seeing multiple bearish flow breaks, right? That's going to be an amazing tool for you to actually track and monitor flow. And even if we do not break this first block over here, right? If you see that um we hit this bearish flow, we then return, we mitigate the bullish block, then we break that, that's going to be great because now you can say to yourself, hey, bullish block created, bearish flow respected, bullish flow respected, bearish flow broken, right? And you need to be sort of understanding that, meaning which order flow are we breaking and which one are we holding? Because once again, in the way we trade the markets, you're literally monitoring the orders that are being introduced, right? You need to understand that as price is moving down and then it's moving up and then it's continuing down, those are orders being introduced, right? So understand that idea very well. Here we have bearish orders coming down, bullish orders coming up, stronger bearish volume coming down, weaker bearish volume coming up, stronger bearish flow delivery, right? So what is the probability that if you see something like this unfold, right? And let me actually denote that, right? What is the probability that we're just returning up here to once again allow smart money to continue lower? So that is pretty much a little bit of information about mitigations. Once again, to sort of sum it all up, you want to be understanding the liquidity aspect of your mitigation. You want to be understanding the order flow, delivery, and shifts of your mitigation. Another crucial thing is the timing, guys. And I cannot stress this enough. This is crucial. If you actually spend some time in the charts, you will understand this idea very well. You need to be asking yourself, when and why are we mitigating that block? Right? That is an essential key. If you see I don't want to get rid of everything, but we're going to be sort of removing some of the stuff over here. Those ideas should be clear at this point, right? So let's remove a little bit of that, not the writing. I want to keep that. Let's remove a little bit of that. Um, okay, so when and why are we mitigating that block? That is a question that you want to be asking yourself when monitoring a mitigation. If you're mitigating this block and it's New York open and we've manipulated people on the way down and we've filled imbalances on the way down and we've got an Asian pool over here on top, then you need to be asking yourself, what is the probability that this block is going to be holding and this liquidity on top is going to be run, right? Those are key ideas that you want to be understanding extremely well. Lastly, guys, you need to understand that being able to read the order flow delivery and blocks is a skill, okay? It takes time, effort, and dedication. So please understand that it will not happen overnight. You will read them wrong sometimes. I do that too. It's okay. You don't need to be 100% correct all the time to make money. As long as you have a good risk management system, a good trade management system, a good edge, meaning what are the criteria you're using to enter positions, you're going to be fine. You're not required to be 100% correct in this game. Okay, so understand that it takes skill, effort, and time to actually be able to read mitigations, right? And sometimes they do really take a very long period of time, right? You can see a mitigation, you can see a block being hit at 1 p.m. and it will not move till 3 p.m. or 4 p.m., right? Depending on what's the timing of the market. There are certain periods of hours during the day that provide moves. And once again, that is not a secret, right? London Open, New York Open, Asian Open, London Close, New York and New York and London crossover. Those are key ideas. And if you see a block being mitigated during those periods of time, then well, you have a higher probability and confluence of that block actually providing you a good trade, right? So I really do hope this video made some sense in terms of mitigations. We're going to be very quickly jumping right back into the charts, looking for an example, applying a little bit of the different tools and information I've just given you for free on the YouTube channel, and then the video is going to be done, right? So let's actually, give me a second, guys. I'm going to be pausing the video and we're going to be jumping right back into the charts. So traders, we're back on the charts. We're going to be keeping this part of the video rather short. So let's actually get started over here, okay? We're going to be using the replay tool and working through some mitigations, trying to apply what I've just explained to you guys, right? So let's actually go over here. We know this block actually worked and held. So this is going to be a pretty good example. And we're going to be sort of seeing the order flow delivery and the mitigation unfold, right? So let's actually denote, right? Let's say you're a trader, and for whatever reason it may be, right, we're now focusing only on mitigations. You decided, hey, I want to be watching this block over here for potential up moves, right? Maybe you say to yourself, it's sitting below Asian lows, such as this one over here, such as this one over here, right? You've got two sets of Asia lows. You've got trendline liquidity over here, right? If we drag this across, well, actually, no, this is not trendline liquidity at all. We do not have the third touch. However, we do have, what is this? Where is my tool? We do have swing low liquidity, relative equal lows, right? This does look like some sort of trend line over here. We have imbalances fail. You can see how that gets mirrored to the right. And now you're saying to yourself, this is an amazing area for me to look for buys, right? So you wait patiently. Now you're zooming into lower time frames, right? Because once again, you're approaching the mitigation block, okay? The block that you want to see mitigated. Let's quickly remove all of that and let's zoom in over here, okay? So we're patiently waiting for the mitigation to unfold. Okay, so at this point, this is, let me see over here, right? Let me actually refine that. I mean, if you're using the entire sell to buy zone, you're already in the block. But for me, I would be sort of avoiding the imbalance because that's likely to get filled. And I would be working with an area of this sort, right? And then you drag that across and you're still waiting for your tap right over here. Right, so at this point, we've already tapped the block, right? This is your first tap within the block, right at, what is this? This is 3 p.m. Good, so we understand that. Now, what has happened over here? You need to understand, guys, that first of all, compression, right, is being shown to you right over here. You can see the distance between the lows. It's not that massive. It's actually rather close. So that's your first clue. Clue number two, right? You're seeing messy price action over here, right? So you know people are getting involved over here with buy and sell positions. Those are likely to get manipulated and taken out. And I can guarantee you guys, if you're working with maybe a little bit of a bigger zone and you probably had a bigger block, you would have probably been looking at this and you would have said to yourself, hey, we've tapped that, we moved up, we're probably going to be continuing up. I'm going to be taking a buy over here, right? This is maybe something that's sort of you think it's going to work, right? You put your stop below the low and you get taken out right at this point, right? Reason for it, once again, you need to wait a little bit, okay? You need to understand that, hey, first of all, we've not tapped into the refinement, right? If we look to the left, this is sort of where the block begins, right? If you're looking at this, let me denote that sell before you buy, right? So that's a little bit of that. Number two, let's go back in time. Let's go over here actually to the present time. You want to be seeing manipulation occur, right? You see trend line liquidity, that gets taken out, swing low liquidity out, right? We come back, mitigate the block, drop even further. Now, when something like this unfolds, guys, you need to understand that this is not regular price action, okay? This is something interesting, and look at what is happening, right? 3 p.m. So you're pairing your smart money understanding with timing and everything else that you know, right? So you see a candle like this, now you have a clue, you have multiple order flow breaks, right? And once again, this is where we go back to order flow shifts and order flow blocks, right? So let me actually grab the right tool. This is a order flow break over here, one layer, right? Let's continue, 2 layers of order flow break, 3 layers of order flow break, right? You're breaking bearish order flow. Now you're wanting to see bullish order flow hold, right? Maybe you look at a POI such as this one over here and you say to yourself, hey, if this blocks hold and we break above that high, then we're going to be good for buys, right? So we do that, now you're valid for buys, because once again, you're watching the order flow delivery. You've understood that manipulation has occurred within this area, right? Within this big consolidation. You've understood the liquidity that you're taking into your block. You've understood the imbalances that were filled on the way down, and you understood the momentum now pushing up, the order flow breaks, the bullish order flow holding, and now you're probably going to be good if you're trying to get involved into buy positions, right? Whether you want to be using a block over here or this one, that's completely up to you. But I wanted just to give you the mitigation keys over here, okay? And to finish this video, we're just simply going to be summing them all up over here. So mitigation keys. Number one, timing, which is when are we hitting the block? We're hitting the block. Number two is read the order flow shifts plus delivery. Please understand that I cannot get very in depth over here, but you need to work on that, okay? You need to be able to read the order flow shifts and delivery. You need to understand the liquidation process of your block. Are we, where is it? Have we liquidated yet? Liquidated yet? Right? And understand that orders need to be closed. So it may require some time, right? It's pretty much, it's just logic, okay? You need to be able to understand those ideas, and you need to understand that monitoring mitigations takes skill, so give it time. Those are the ideas I wanted to pretty much present you in this video, okay? As you can see, we've pretty much applied all of them. We're mitigating at 3 p.m. We've been reading the order flow delivery, right? We've understood that, hey, over here, we've broken some bearish order flow. However, is that enough for you to actually decide that we're now going to be shifting all the way up? Or you may want to be waiting for a structure like this, right? Where it's much clearer, much easier to read. So understand that. Now, that's going to be it for the video. Remember that the Telegram channel is going to be available in the description below. Remember that my only Instagram account is also going to be listed in the description below. And yeah, and the mentorship access, if you're actually interested in that, you can always visit the Launchpass website and you will find access over there. So with all that being said, guys, I wish you all good and profitable trading. Please leave a like and comment and subscribe if you actually enjoyed the video. And that's going to be it, right? Thank you very much for listening, and I will see you guys very soon.